All right, good morning, everyone. As always, we're gonna do a big picture outlook, go over some top ideas. Haven't mentioned you guys are posting a bunch of charts in the chat, which is great to see. So without further ado, we can get started. Again, SPYs in this mini base inside of this macro breakdown stage. Again, a lot of the sectors, just again, we can look pretty healthy. Nothing looks, too bleak out there. It seems most are just kind of forming this base, trading within this range. And we have to just, again, I feel like we need to get like a poster printed for this year, like just sell the pretty and buy the ugly. And at the end of last week, going to the Fed meeting, everything was beautiful as we ran into major resistance, and we've since then started to pull in. And we're in the middle of this, 390 to 350 range. We want to be, I should probably change that to red. We should be looking to sell up near resistance and looking to buy near support. So again, with these lines, I try to make them like as color coded as possible. So like the red is resistance, it's red. We want to think sell. The base, we're kind of consolidating. That's orange, like an orange light, like the light is about to turn red, but it's telling us to kind of slow down. So I try to, when I do the big picture, I try to use the colors where I think, okay, it can break the resistance line. It's probably going to be green. If I think it's going to hold the resistance, I try to keep it red. So if that makes a little more sense with the newsletters, I try to keep those colors with the thought of if I think it's going to hold or break, if that makes any sense. So again, going to some individual sectors, we talked about energy these last few weeks, and we've had some decent energy trades. And as we had this last little breakout, that pretty much was a magnet on this retest, meaning that more likely the market was going to run to this retest, and then whatever follows that will happen after. But in the meantime, we got exactly what we were expecting, was this retest of the 52-week high. And here's ultimately where you get either that few day follow through where the really late traders can chase it and then the move kind of fades, or it's that perfect retest. Oftentimes we've lately seen it push higher a couple of days and kind of trap longs before pulling back in. But for us, or for anyone who's still holding the energy trades, just keeping a tight stop either underneath this equivalent 126 or this 123 area. If we start to see the energy sector roll below these two areas, depending on how tight you want to keep your stops for the individual energy stocks, that would be times to kind of see the writing on the wall. Like this is more likely going to have to pull back in and set back up for that next attempt. And eventually we'll be buying this 130, but in the short term, a 30% run up in a month is a dramatic percentage increase. And you have to take advantage of it. You don't want to hope and pray and then give back half of it and then getting stopped out down here when we have this very easy sign to flash our light to take some profits. Again, 10-year still flagging up here. Again, Fed's still raising rates, but kind of changing their tune. They're trying to change their tune very slowly. But again, just still very strong. Again, if this was a chart, we'd be looking to buy this break, and if it breaks the downside, great for us. Some individual major sectors, again, a lot of the major sectors, major markets, it's kind of the same theme here. We're in this very big base here. We're near the resistance area of these bases, and we need to kind of be patient and wait for these next setups to develop. But a lot of the action here looks very healthy. A lot of this doesn't look like the bear market's going to continue into 2023, or this it's going to be horrible for the foreseeable future. A lot of this looks like very healthy action. It's a very normal kind of basing activity. Again, if we were to break down, say, the consumer discretionary sector down below 220, probably a bad sign in the short term. But a lot of the things here, other than really tech, tech and REITs have been pretty banged up, and telecom, but a lot of the other sectors are holding up pretty well. So a couple of names that I'm looking at, we have this Regeneron. Earnings are out of the way. It's been kind of flagging up here. Very nice earnings flag. This blue sky breakout. We've seen these higher pivot lows since the last time it gapped up. I'm not sure what this news was. Probably some drug news, but it's holding up here very nicely. And we'll be keeping an eye on this 730 breakout when it probably needs to tighten up a little bit more. If this was to, open today above 740 and work to 760, I'm not going to be, trying to chase it today. But when it can tighten up a little bit more, I think this looks, very good for a move higher. This DCP, which again is in that energy space, I was just mentioning being very cautious here as it's retesting. And if it has to pull in, maybe this DCP is too tight of a setup that's not ready just yet, but still want to keep on the radar. And last week, finally added this Humana trade. This was another blue sky breakout in this healthcare sector that just worked very nicely, just kind of trailed the stop versus the prior low day and got something on Friday. So that's why my focus is more on this Regeneron, kind of same space. That sector has been working. So just keeping a close eye there. So Evan, if you have any ideas or some other ideas you want to go over, yeah, we'll do that now.
Yeah, absolutely. Let's go over some number ideas here. The first one, Reynaldo is looking at ABBV through Friday's highs. So it had earnings about 6 days ago, which it gapped down, sort of recovered. And then since then, it's just been consolidating within that earnings day. So this one actually looks pretty interesting because it's not a very obvious setup, but that seems to kind of be the theme this year is like you catch the breakouts where they're not super obvious. So I mean, this one you're risking, what you're buying it through 145.50 or 146 versus 142. You're risking $4 for that eventual move into pretty much that red resistance line that you have drawn out up top. I think it's a pretty decent risk to reward for one of those quicker, 2-3 day trades. What do you think?
Yeah, no, I mean, it's kind of like that sneaky buyback where like everyone cares about it this day, and then the trade doesn't work, and then everyone forgets about it, and then eventually it kind of just sneaks through. So I mean, it's definitely tight risk here. I think it's definitely worth a shot.
Yeah. Next one he's looking at is this AJG. AJG Finance Company.
Oh, wrong one.
Again, another. No, there you go. Gapped up on earnings. Again, just sort of consolidating. A lot of setups have been looking like this. At least when I did my scan, not everything, but a lot of things were gapping up and then flagging, which is great to see. These earnings flags are sort of our bread and butter. So this one looks pretty good. He's looking to buy this one through 190.
Yeah, I like this a lot. I like this a lot, especially as we keep having these like recession headlines and everyone, fearing or wanting that to come to fruition. An insurance company could not be better protected in that environment. You're still going to pay your insurance, so it's a very recessionary-proof sector. It's not going to get too affected. You're not going to not pay your, car insurance or your homeowners insurance because of a recession. That stuff's going to get paid no matter what. So definitely a great sector should that, scary headline continue to, be one that we focus on. So definitely, tight little setup here. Like it a lot.
Yeah. Abby is looking at AMD through 64.
All right. So I mean, she's definitely been good with these like contra trend trades this whole year, but this just seems to me like too much of a bear flag. That, I mean, if she wants it through 64 versus, I guess, this prior versus 15. I mean, this just screams to me huge bear flag at lows.
Yeah, it's a tough one, I would say. Yeah. I mean, there is definitely some support at this like 58 area. Like if you zoom out a nice chunk, you can see, and then just go back, you can see it actually flagged right under that 58 back in what is that?
Yeah, this is back
July 2020. And that's when it had a major move up. So, I could definitely see this area holding as support, but it's definitely a tough trade. I mean, you have to risk 10% in a downtrending stock that's been struggling all year. So this would be a tough one. But I mean, I could also see it kind of pushing really quickly, but I think it's definitely one that you have to take profits really fast, because anyone that's stuck in this one that's been sitting in it, they're just waiting for any 10% move to the upside just to take some profits.
Yeah.
So that's just something that you have to keep in mind, man, for sure.
Yeah. I mean, tech is NASDAQ's weakest major market. Tech has been pretty not participating the most lately. And then AMD and NVIDIA both kind of pretty banged up down here. That if I had to pick one of the two, I'd rather buy NVIDIA, just because at least this kind of at least V-bottom a little bit off this low. It's a little more of a defined base, it's a little bit more of a range. Where this AMD, it's so tight, even though it's 10%, just like it just looks very tight here, where from a basing standpoint, you'd want that. But this just screams like huge bear flag. And even if it does get a bounce, maybe you get a move to 70 best case, because everyone again is trapped from this move where you're kind of at a coin flip. If this was for the 2-week highs, this was a super tight flag near highs, very different. I think this is just going to be a very tough one and it just, again, the point of why I think it's going to be so tough is just this base is just so tight where it just screams bear flag, where this NVIDIA, at least there's like some movement here. Like there's buyers and sellers are kind of duking it out, where NVIDIA is just kind of like flatlining. It's just like, yeah, I just got smoked and I got nothing left. It seems just tired down here. But
yeah.
Who knows?
For sure. Ronaldo just posted one in the chat. He's looking at KNSL through 325 earnings flag. It was a little extended in my opinion, but I mean, you can see the momentum, but this is a tough one. I mean, you'd have to give it down to 302, 300. So you're risking almost 10% on this. I think this is one to keep an eye on, see if it consolidates and flags over the next few weeks. But I think you're pretty late to the party buying this. So you're buying,
I just think,
very, very extended name.
I think with a lot of the earnings names lately, they look so, even like Disney last quarter was a good example of this, where it looked like this day, like this third day, I forget who it was, they wanted to buy up through like 128. It's like we just needed to develop, and then it just got smoked. And I don't remember the ticker. What was the name that we just mentioned?
KNSL. Kinsale Capital, yeah. Another finance insurance.
So this just needs to develop a little more. But I think, like, again, if it's risking 10% in this or 10% in AMD, I would take this all day long.
Yeah.
But you do have to give it versus this 300. But I think you just keep it on the radar and let it develop. Even if it takes to this today, I don't think this is going to go today and just, off the races. But this can develop for a few weeks, a couple of attempts here. Definitely want to keep it much closer on. You can risk maybe 5% in it realistically, versus just buying this first the low day and hoping it works immediately.
Yeah. Next one, Ricardo is looking at BJ entry 79.80 area. B is in boy.
Oh.
Like BJ's wholesale.
What? Really good? Good job. Fine. That's good.
Good job, Jace Jr.
So is BJ what through 79?
Yes, 79.80 area looks pretty solid. Gapping up this morning, not anywhere above that area, but it just, it had a little bit of a reversal on Friday, still closed red, but now it's gapping towards like Friday's high, which is nice.
Yeah, that's great. Like a lot.
Yeah.
Is this blue? This is
really
all-time highs?
Yep.
Yeah, wow, this looks, I think this is probably so far probably one of the best chart setups that we've seen, but we do have, of course, we have earnings in 2 weeks. Yeah, but so it's probably not going to go until then. So that's what it's like, looks the best because it's not going to go into earnings, and earnings will probably take it away, but let's hope it doesn't and we can get something.
Yeah.
It's great.
Next one. Kusha is looking at KBR through 50-50.
KBR 50-50.
Yep, right there.
Yeah, I mean, definitely see the spot he's looking at. You do have these other pivot highs, 54, 57. So if you're going to take it, you definitely have to look to take some profit in those moves. Buying 50 versus 48. Earnings are out of the way. You probably can keep it tight versus 49. I think if you could buy 50 half versus 49, probably going to be the better risk reward trade than giving it the more room for this, just because you're not going to, you have some areas here you're going to have to fight with. So keeping this tighter, I think would make more sense, but yeah, I think it was good.
Yeah, I agree. Next one he's looking at is GLNG through 28.50.
I'm sorry, to 2850?
Yep.
Okay.
A nice base.
Yeah, definitely. I mean, definitely setting up. I always get a little cautious when you see like the marine shipping companies. I just think it dries. That was like
Oh no.
that was like pre meme stocks. That was just that very bubbly stock. Let's see if it's still trading. Nice.
Yeah.
Nope, now it's gone. Again, yeah, looks good. $1.50 risk. Take that little flag up here. Okay, that's all right. I mean, definitely takes the profits into this retest, but after that, it seems like it has only been above 30 for some time now. So those are things you have to just take into consideration where the stock hasn't been above these prices in many, many years. You definitely want to be quicker with taking these profits because it's not like this thing's going to just drift to 40, in a few months, because it's clearly showing us the stock has not been doing it for many years. So those things you want to just take into consideration when it's been sitting up this long.
Yeah.
But that's good.
Yeah. Yep. George looking at CB earnings flag says needs some time, but trading near all-time highs. CB, B as in boy. Chubb Limited. Yeah, I agree. Needs some time. It went pretty far, pretty fast. Essentially straight up from 175 to 215.
Mm-hmm.
But I think with a couple weeks of consolidation, possibly like next earnings, if it can sit under that 220 area and flag, that'd be a pretty nice one.
Yeah, this reminds me of like the energy sector right now, where it just had to get back to this retest, and now it's kind of in my opinion, probably still a lot up here, but eventually we're going to want to buy this through this 130. It's just not right now because it just ran 30%. So this CB is kind of the same thing. It's got like that magnet on this retest. It wants to get back up there, and it probably will. In the short term, it could probably still get another little bounce up there. But it's gonna take some time. This thing just went from 170, almost probably the same percentage move as the energy sector went. This is probably almost 30%. That just needs some time to develop, but in time, definitely going to be a chart we're going to want to buy through those highs. Just not right now.
Definitely. Next one is George is looking at RTX. He's looking for a little bit of consolidation here to sort of fill out this cup and handle pattern, but looking to buy 97 versus 93.
97. Versus 93. I mean, definitely see what he's looking at. Probably he's going to have to tighten up a bit more. Again, this reminds me, just like we talked about that CB, same with the energy sector. Even though this isn't technically a perfect retest because it's obviously broken there many times, but this has definitely been a base that's been forming. Definitely see the cup and handle that he's looking at. I just think that when you see a lot of these dojis up here, 1, 2, 3, I'm just going to call these all dojis, even though this one kind of isn't. A lot of indecision up here. It probably needs to develop a little bit more, and probably we always want this to hold, like that's what our expectations are, but sometimes it needs to come back much further than you'd think before it's going to really push up through, this 90, 97, 98 area. So this is a good one, keep those alerts, keep that 97.5 or 97 alerts set, and if it's going to go that day, then you can make the decision. But I think in the short term, it just needs to tighten up, needs to develop more.
Yeah, I agree. It needs to solidify that 93 support, if not even make it a higher support. And this could be one that you might be looking to buy off that 93 versus trying to buy. Like I wouldn't look to buy 97 today if it broke out today, because the probabilities of it just continuing with that little of a consolidation is pretty low. So I would much rather either see it go sideways or actually come down, test that 93 again, and then see if I can sneak in on a support buy there. That way I can even just trade that $4 or $5 range and then have some for the eventual move through that 97 resistance. Next one he's looking at is SLB.
Schlumberger,
Schlumberger. What's that?
SLB.
Yeah.
So this one
he
again,
said,
Mhm.
he said he was forming a nice earnings flag as well, turned previous 4-year resistance into support at 49. Weekly also looks great. He's looking to buy it through 54.
yeah, I mean, this up here, this to me is just take profits up here. Again, the energy sector retesting. This is, if you want to buy, like, think of like in the last month, the number of setups that were here. You had this support buy here, so you had setup one, you had it through the base through 38, you had the bigger base through 40, you had this entry, you know, had this entry through this high. So you had 1, 2, 3, 4, 5, 6 trades in this. This is now the 7th potentially bullish setup in this name. So each time these like subsequent setups occur, the probability of it continuing starts to diminish because it's like, how many more times is this setup going to keep working until it fails? And this just, again, major sectors retesting its all-time high. Everything looks beautiful. Energy looks as pretty as humanly possible. And this whole year, whatever has looked the prettiest has been the things you want to take profits in. And this could not scream more sell 54 right now than I want to buy it, when a month ago it was 33% lower or 28, whatever the exact percentage is. So I think this one, you know, if you just look at that move, like, I don't know the expectation of like, what's this, you know, what do you expect after this?
Yeah.
You know, so I think this one, and this is a really big, you know, area.
Yeah,
to
and
take
if you
some
zoom
profits
out,
in.
I was going to say, yeah, and if you zoom out and look at the weekly chart, I mean, that 60 is going to be a massive resistance level, because that was support for 5 years, you know, from literally 2009 to 2019, so 10 years. And once it cracked, you know, I don't expect that level to just break again to the upside that easily. So you don't have much upside there, you know, so you're buying an extended move, plus you don't have a ton of upside because of that resistance. So that's I would definitely pass on this one for now.
Yeah, it's just, again, you like the real range in this stock right now is 50%. It's like best case, it's going to 60 in the short term, and very realistic case, it's going back to 30. And you don't want to be at the up, and that's just the, you know, again, will Schlumberger see these 120s in time? Probably, but it's not going to be anytime soon. It's going to, you know, the energy sector is definitely, you know, working its way back to, you know, broadly being a very strong sector, which the beginning, you know, 2 years ago, it was the worst sector. This was the time when everyone thought, you know, energy was dead forever. And now it's like
zero.
And now it's energy is the best thing in the world again. So when it was the worst city and you know, possible, it had the best risk reward trade, but most didn't want to buy it. Now it has the least risk reward trade, and everyone wants to buy it. So that's where you want to, like if this was like a big picture, I'm rebalancing and selling energy. I'm not rebalancing and buying energy. Based off this chart, I was, you know, we were buying it down here, and now would be the time to, honestly, like this is what you want. This is what you want to do. If you're about rebalancing, it's like you want to buy it when it looks absolutely horrible, and you want to sell it when it looks absolutely perfect. And like on the flip side, right now, telecom is like the opposite of that. You know, telecom looks horrible. So if we had a rebalance, it's like we would be selling energy in this M1 example. You're selling energy, and you'd be buying back the worst sector, which would be telecom. And it probably goes lower, and you keep buying it. And then in 2 or 3 years, when it's back up to here, and then, you know, we're talking about iPhone 45, you know, then we start to sell it again. So that's that broader idea. I know we kind of on a side note, but that's the broader idea with the rebalancing. It's like the most beautiful sector, you take the profits in and you buy back the ugliest one. And you can do that with the sectors because the energy sector isn't going to go away. An individual stock in the energy sector can go away. You know, even though Dries is not an energy sector name, but there's those equivalent individual stocks. It's hard to rebalance the stocks with the sectors. You kind of get bailed out because you're buying the entire, you know, area, not just one individual name.
Yeah. We got a couple more charts here. Con is looking at Starbucks. SBUX. He is, let's see, he's looking to buy it through earnings high, right under resistance at 94 versus 89 versus 90, I guess.
Mhm. Again, any of these like earnings gap ups, you're gonna have to give them a couple weeks. I think a good test for anyone looking at these earnings is go back to last quarter and find any name that gaps up and then goes. Like day one, it gaps up, and then from that point, never sees that earnings low of day and continues higher. And I think if you look through 100 earnings names that gapped up, you're not going to see that immediate follow through. You're going to see, weeks or a month more of a setup before it really goes. And that's what a lot of these setups, these earnings beats are great, but it's not great day 3 or day 2 or day 1. It needs to form an actual setup. So great.
But if that flags, that looks amazing because it's gapping up right to that major resistance level. So it looks great in a couple weeks. This is definitely one I'm throwing it on my watch list, just to not a close watch, but one to review and come back to in a week or two or even more. Definitely.
Yeah.
Next one, Blake's got a couple.
Yeah, even these are great just to throw those alerts. Like you throw that 94 alert, and maybe it does, go tomorrow, and you get that alert, and you could buy 94 versus 93. Yes, like a day trade. Maybe you do take it, but I think broadly as a swing, I think that's going to be a tough one. But we can.
Yeah, I'd wait for the retest. If it does break today, I would not touch it. I wait for it to pull back into that 94, see it act as support, buy it off that support, and then see it break out, because that's usually a much more efficient trade when there isn't a lot of structure to the actual setup before. Blake's got a couple. He's looking at EPAM systems. Going to buy through Friday's highs versus support at 300. Inside day at support. This is one of those low risk, low probability trades, I would say, because not really a falling knife, but it did fall pretty hard for 3 days. But it seems like it has found some support at 300. So it's like, it either bounces here or you're out at 300 and you can just get out. That's my opinion. But that also looks like a bear flag.
Yeah, it's like a huge H. This is not like when you can buy any stock at support at the exact price you want, it's probably going lower. So it's like if you want to buy, not that he's saying he wants to buy 300, but when that's the opportunity, when it's that close to just sitting here, if we just draw this, if you draw like an H, your hand ends up lower. This seems like this ends up lower. I've also never traded this thing out. But this to me seems like a pass. This was the extremely easy time. Now the stock is just kind of getting, this is even a much bigger H almost. So it's like a smaller H
within the H.
Within an H, yeah. So it's like we got rid of that little section.
Yeah.
And it's just a big H pattern. I would just avoid this. I don't think it's worth the battle.
John's looking at RYTM through 27 earnings tomorrow morning. So obviously we won't be looking to trade that today. I know that this one, Shake has been trading this one for like the last 2 weeks, trying to get that breakout. But it's been flagging really nice. Pretty much since last earnings. So it's a really, really nice macro bull flag. So we'll see. We'll have to see how earnings goes tomorrow, see where it opens. And
this thing is crazy. I want to know what the hell happened down here. This was like $4 and now it's up. Just insane.
Yeah.
Was this like a drug? Something had to have happened. But this thing went from
it's a pharmaceuticals company, so
but that's again, it's amazing flag here. It's just crazy. Like whatever this is crazy. Crazy.
Yeah.
Pharma recent IPO. This again this is like a cushioning through 30. This 32, 36 is like a cushion special. But yeah, I like it. Definitely. I'd much rather buy this name than than this EPAM. Even though this was super dead a little while ago, at least now it's woken back up.
Yeah. Next one, back to Blake. He's looking at MSA. consumer durables.
Okay.
Earnings flag. I don't know. I don't like this one personally.
Well, the one good thing is it's out of this downtrend, this breakdown stage
Yeah.
finally, which is the one positive. This is like the market right now. The market's in this breakdown stage broadly, and we want to see it work itself out of it, which this stock has started to do. And now it's, what's the next pattern, which probably is going to be through this. The market is open, so anyone has to leave by all means.
Yeah.
This seems to now be the breakdown stage is left. The stock has left the breakdown stage. Now it's going to be in this much broader basing stage. And this 140 is probably the spot that it will need to break, but it's probably not going to anytime soon. It's going to have to digest this massive move. So it's definitely one to keep on the radar. But like we said before, earning, 3 or 4 days after earnings, it's just not enough time. This probably develops over the next quarter for an eventual move through 140, but it's probably not going to be anytime soon. So it's more just like keep on keep that alert set, but don't watch it every day, because then you're just going to try to find a reason to get in when it's probably not going to do what you expect it to do just yet.
Yeah. It's also got 140K average daily volume. So that's like super, super thin. Let's see what else. Blake's got like 40 charts, so I'm not going to go through all of them. Blake, you got to pick your favorites.
Pick one more, and then we'll wrap it up with that.
I'll pick one more from them, see what I can find here. MEDP, actually, this one looks pretty nice. MEDP.
MEDP.
Earnings flag. Yeah, MEDP. Earnings gap up, seems to be holding that earnings low for now. Not something I would buy today, but definitely want to keep on watching develop at that 230 resistance. It's eventually that'll break. Third attempt. So
Yeah.
It's pretty good.
Yeah, so the 230 looks great. It's definitely got to smoke this 200 and get in some part of this gap fill. There's no way that this thing holds. Like this has to, in the short term, get tested to the downside. But after that, through that 230 looks great. There's just too big of a gap. 200 is too correct of a number. It just has to push that in the short term, but through 230 in time, through that blue sky area, for that, we're going to call this the second real attempt, even though it did test it here twice. First major attempt. This is the second, and then third or fourth, probably when it does go. So this one looks, of the names, this is probably the best one on Blake's end, but just again, not going to probably happen tomorrow. Or
yeah. Coulson's looking at HES.
yes, okay. So again,
HES.
energy.
He said, yeah, mini bear flag after a base breakout, just said earnings, more time would be nice.
Oh, I think I put in the wrong ticker. HES or?
Yeah, HES, Hess Corporation.
He wants to buy this?
Yeah, I'm not really seeing it. This just looks like a Mickey Mouse flag. So just an important lesson here is like, this is extended. The entry was 132. That was the clear resistance breakout. Now you're just chasing.
Yeah, again, energy sector retesting all-time highs, super extended. This is up nearly 50% this month. So just that's something when you see these numbers, they can be misleading, where like that AMD base can look very tiny, but it was 10%. This move this month from 100 to 140 is a 48% move. So sometimes you just almost say that out loud, like this stock is increased by 50% in 30 days. It's probably not going to repeat that. More likely, we'll fade this entire move before it goes to 160. So this is, again, when it looks the prettiest, especially for this year, you want to take profits. You want to sell the stock that's up 50% a month. You definitely do not want to be joining a party in the stock that's up 50% in a month in a sector that's retesting its 52-week highs, or 52-week highs, not all time. So I think we'll leave it at that. This is going to end in like 20 seconds anyways. So again, great job with all these ideas. Again, not every day is going to be a good one. A ton of mine are always going to be wrong as well. So don't think if we say like this stock doesn't look good, it's anything against you personally. It's just a setup just isn't there. And that's why we have these discussions where maybe I'm wrong, or maybe the setup does work, but we can at least talk them out and explain why some are good and some might need more time. So keep these ideas coming and
Absolutely.
we'll keep finding some good ones.
Yep. Catch you later.
All right, guys, see you in the chat.